Good morning, Richard Calhoun, real estate broker with Creekside Realty, 40 years working with buyers and sellers. We're here to talk about Silicon Valley real estate market in week 15. Moving right into the data slide. The first thing that should catch your attention is this huge drop in the gray line. That's the number of new listings. Why? Easter. Sellers do not put their home on the market the week before a holiday. Real estate is negatively impacted by every holiday except for Mother's Day and Valentine's Day, which have a slight positive impact. The bigger the holiday, the bigger the negative impact. You can see that Easter moves around a lot. It's not day certain, in other words. So when I do a 5-year median, 2015 through 2019, Easter gets spread out over different years. But when you're looking at this week's specific data, this is the Easter impact. I don't expect that to continue for next week at all, just because the holiday's over. And you can see the total available inventory went down a little bit on a percentage basis also because the buyer demand went down a little bit, but that means with the lack of new inventory, buyers were going back and picking up some of the leftover stuff from the week before. That's the biggest change. As I said, the blue line down here is the total inventory that's available currently based on the percentage of the 5-year norm. And then here is your demand, which is what's driving this marketplace. We've been basically 10, 15% above the level of demand you'd expect ever since the pandemic got released us from being able to sell property somewhere around May 1st. Didn't happen instantaneously, but it wrapped up pretty quickly. You can see last year in week number 16, you were only at about 105%, but by week number 20, you were at 120%. You had some weeks where you were 140, basically right around 115, 110% ever since about the middle of last year on. It's a demand-driven marketplace. This is looking days of unsold inventory. To me, that's the single biggest indicator. It's the rate of sales, the rate of absorption, how quickly you'd sell everything that's on the marketplace. And the quicker you'd sell it, the more upward pressure there is on price. So the 5 years that I'm using are the 5 years before the pandemic, which were all great years. We're actually outperforming because DUI, the lower it is, the more you're outperforming. We're outperforming 5 great years. And that's why we have what we have in the current market situation. This is the pressure the buyers are feeling. Well, what this is it's the sale price to list price distribution for every week for the last 22 weeks. The blue dotted line here is the worst monthly data I ever used. So I went back to December of 2001 and plotted that. And the best month ever is up here, which is just last month, March of 2022. And March data is starting on the 1st March and then going for 35 days afterwards. So it's not a Saturday through Friday like all my other days data is, but it is a 5-week moving average that starts on the first of the identified month. So it starts on March 1st, goes for 35. So that's your best month ever. April will probably outperform it, but it's noteworthy that the purple line down here, which is the current week, does appear to be a little weaker than the last couple weeks. So April may be tied for March. March may outdo April. It's a little hard to tell right now. This is activity that was happening 5 weeks ago because of the length of the escrows. But this gives you some idea of the amount of pressure the buyers are feeling and how much they're overbidding. The higher the number goes up and to the right, the more they're overbidding. The lower it goes to down and to the left, the less they're overbidding. This is the same data, but it's just looking at the last 12 weeks. It's a little easier to see. You can see your solid purple line up here is the most recent, but your burnt orange line up here is last week. The gray line that's solid is the week before that, and then the bright orange is the week before that. So the 4 solid lines are the best 4 lines basically on the graph. The blue dotted line up here is doing pretty well, and I think that's going to be March 12th closings that were ended the week of March 12th. This is the key components broken out for you. I'm crossing out the base cities and condo townhouses because there's been a lot of new growth in that area over the last decade. And so when you compare it to the 5-year median of 2015 through 2019, it looks like it should be a cold marketplace. But if you go to DUI, and you're sitting here at 14 last week, 21 this week, you go, wow, that's a pretty fast marketplace. And it is a pretty fast marketplace. The reason the DUI are crossed out for the condos is I don't have a lot of confidence in it. And I did go back, and I thought I knew what the problem was, and it wasn't the problem I thought it was, so I wasn't able to find it incorrect. Problem in Santa Clara County is the 19.6 and the 19.9 is greater than any of the micro market areas, and that can't be. You know, if the greatest market area is 18.6, the DUI for the whole county has to be less than 18.6. So this number's wrong. This number also appears to be wrong. I don't know why. That's why they're crossed out. My other data all looks like it's okay. Single family homes, you're looking at 59, 60% of the inventory you'd expect in Santa Clara County. Go just a little bit north up into San Mateo County, and they're at 94% of the inventory you'd expect. Santa Clara County has 88% of the condo townhouses that you'd expect. So the real shortage is single family homes in Santa Clara County. The DUI, though, it's sort of surprising, is actually faster in San Mateo County at 43 days. They were about even last week. Santa Clara County actually slowed down a little bit to 16.2. San Mateo County accelerated a little bit to 14.3. There is some possibility that whatever issue down here that's unidentified may be impacting this data. It looks reasonable from my quick checks, but I will have an update hopefully next week once I find out what the issue is. And it appears to only be impacting the days of unsold inventory, so it would have to be the number of listings. Now moving on to the amount of overbidding, 92.3, very consistent with last week of 92.6. San Mateo County, 89.5 versus 90.4, again, very consistent. Condos, very consistent, just down a little bit, 90 to 89.5, down a little bit, 80 to 79%. Magnitude of overbidding, these numbers are basically flat, down a little bit in Santa Clara County, but a 1/10%, that's flat, up 0.3% in San Mateo County, down 0.5% in condos in Santa Clara County, down 2% in condos for the Bay Cities. Appreciation's a little different. My base year is the entire calendar year 2020. That way you have a rock solid number. I'm just looking at what the appreciation is going forward. And we've had 40% appreciation in Santa Clara County. We've had 30% in San Mateo County, 30% in Santa Clara County condos, and only 9% in the Bay condos. Now, part of the reason the Bay condos is lower is a lot of the new construction was at the lower end of the existing construction cost, and that brings down your sale price. So individual property values did not only go up 9%, but the overall median only went up 9%. Hope that makes sense. Talked about this last week, just bringing it up for anyone that wasn't on and didn't listen to it. Basically, the Mercury on April the 6th came out with an article, and they talked about the buyers stayed out of the marketplace in February. They blamed it on the global unrest, and they based it on a 20% drop in closings in the month of February. And the big takeaway is closings in the month of February had to be negotiated back in January for the biggest part. That was before we had the rapid increase in interest rates and before we had the global uncertainty. And talk about the 20% decrease. The biggest decrease I could find was only 14%, which isn't nearly 20%. And the other key point that they missed was the base year they're comparing it to, 2021, was a record high in recent times. So here you can see that even though we are down from last year, you're still up from 2 years ago. And this is what I found was real interesting. If you're looking at buyers coming out of the marketplace, you should be looking at offers accepted during the month of February. And across the board, it was the second highest out of the last 8 years, I believe it is. There's the real data based on the MLS. Yes, they're using data reported to them from public records off of DataQuick, which is now some other company. But regardless, something happened where there's fewer grant deeds going into trust, whatever. So there was fewer grant deeds recorded, but that has nothing to do with fewer transactions, buyers and sellers. This is a new graph that I might put up. I'm going to give it a little bit more thought. It's expanding it because the news article I looked at, how much of the area is Santa Clara County and Alameda, or Santa Clara County and San Mateo? Well, Alameda and Contra Costa are both outperform as far as volume San Mateo. If I start following these 4 areas, 4 counties, I have something like 70, 75% of the total Bay Area. I still maintain that Santa Clara and San Mateo are sort of the heartbeat of Silicon Valley and dictate what happens, but it would be noteworthy to put in Alameda and Contra Costa. The big problem is lack of time. This data up here is current as of this week. The data here is my first draft of it, so it's actually data sort of replicating last week's data, and I didn't have time. So what I'm toying with doing is doing the complete chart, but doing it from a Friday through Thursday week so that I can have this done before the crunch to get ready for Saturday. And with that, I'm done with my quick recap and open for any questions. Not seeing anyone unmuting themselves, I'll move on and talk about the micro market areas. April the 16th ended last night at midnight. The redder the color, the hotter the marketplace is. You can see all the different areas here are pretty on fire. Here you can see the data, 19.9, 18.5 is my highest micro market area. Not on here is the miscellaneous areas, which are the Los Gatos Mountains, which have essentially no condos in it, Gilroy, Morgan Hill, Alviso, Almaden Valley, I think, but there's no real volume there. And even that day's unsold inventory, when I went and looked at it, was below 19.9. So there's no way to have 19.9 up here when your highest number is 18.5. So I'm looking into why that number is being reported by my computer macros. If you look up here in Santa Clara County, it's a reasonable number. You're at 16.2, you got a 39, you got a 25, you got a 18, you got a 17, almost 18, but then you also have an 11, a 14, a 14, a 15. So 16.2 looks reasonable. Moving over to the frequency of overbidding, 92 overall. You can see the different areas. The highest I'm picking up real quick is Cupertino Sunnyvale at 95.5%, unless you go up into San Mateo County, where Redwood City is at 96.7%. Condos are doing almost as well now. They're starting to ratchet up. They were around 70% last time I looked. That's improved a little bit. You look at the magnitude of overbidding in the different areas, and you're 117% overall. You got 120% in the moderate low areas, 119 in the moderate areas. Cupertino Sunnyvale, the most frequent place for overbidding, is at 122%. So very strong overbidding. Go down to condos and townhouses. It's a little bit weaker, 111% overall, 114 looks like the high. Very strong marketplace. Now, sold price is not a leading indicator. It's a lagging indicator. The middle number is the median number. The number to the left is the cheapest 10 percentile in that area. The number to the right is the highest 90 percentile in that area. For county data, to make sure it's clear, I reported in thousands. All the micro market areas are reported in millions. Here, the Redwood City is typically your median price at $2.4 million. You go up to the Bay cities, which are San Mateo, Burlingame, San Carlos, Belmont. There's one more. Those are a little bit higher at 2.6, and you can see the pink color coming up. So the higher the price goes up, the redder the color goes. Lower the price from the median, the bluer the color. Color is rated on the median for the area, which is what most people follow. I put in the 10 and the 90, so you got a sandwich of what the price is in the different micro market areas. Now we're looking at the number of new listings compared to what you'd expect. What you'd expect is the 5-year median, which is the yellow line. And you can see, as I pointed out once already, the huge drop in the number of new listings this past week. That is not a market shift. It is absolutely nothing to be concerned about. It's the fact that we have Easter this weekend. Every holiday negatively impacts real estate, and the sellers just do not go on the market when their exposure would be the weekend of the holiday. And that's what explains this big drop. I'd expect it to be above the yellow line next week. Here's looking at total inventory. Because we had such little new inventory come on the market, we ate into a little bit of our very little inventory. This is overall macro data, so it's not just Santa Clara County, but you pick rough numbers, you're probably somewhere around 1,150 homes, and you'd expect to be somewhere up around maybe 1,600, maybe 1,650 homes. So we're missing about 500 homes. Almost a third of the volume isn't here. That's why there's just nothing to pick from. This is the number of new offers accepted. Even though the new inventory dropped off, the buyers bought, but they're buying up last week's inventory for the most part. So next week is when you really see the impact of the number of new offers. Part of this flattening out might be some of that creeping up because sometimes the listing will come on Monday and sell on Wednesday. But in general, the listings come on one day and 1 week and sell the next week. This is your days of unsold inventory over time. So you're out over here at the right-hand graph. You can see they're pretty flat. If you really want to be optimistic for a buyer's point of view, you could say that condos are going up a little bit. San Mateo and Santa Clara County single family homes may be going up a little bit. I'd call it pretty flat, but I do think there's a slight tendency in the upward direction. That's also normally what happens at this time of the year. We typically have a little bit of a slowdown. Here's your days of unsold inventory graphically, and this is single family only, so it doesn't have the condos. You can see, pick whatever your favorite area. The fastest area I'm seeing is 11.8 in what I call the low affordable areas or low moderate areas in Santa Clara County, Milpitas, Berryessa, Blossom Valley, Santa Teresa, and parts of Evergreen. Parts of Evergreen are like around Silver Creek are more expensive, but the lower priced areas of Evergreen would fit into the moderate low area. The slowest area that I'm seeing right off the bat is probably Atherton, Menlo Park in San Mateo County and Santa Clara County. It's Los Altos, Palo Alto. And it is noteworthy that, historically, Los Altos, Palo Alto, despite their high price, is typically one of the fastest moving marketplaces. I believe part of what's going on now with COVID is consumers aren't willing to pay the premium to be close to their workplace. So Los Altos and Palo Alto, et cetera, have become slightly less desirable. And so they're not as in high demand as some of the more affordable, a little further away areas. This is the frequency of overbidding over time. You can see we're doing very well. We're north of 90% of the sellers are getting more than their asking price. This is what I call macro data. So both types of property, condos and townhouses, as well as single family, both counties, San Mateo County and Santa Clara County. This is the overbidding over time. You can see we're up here at record levels on the right side. Anytime you're even at 70%, 60% of the sellers getting overbid, that's pretty impressive. 50% is pretty impressive. That's where I define going into a strong seller's marketplace. I define 33% to 50% to be a balanced marketplace. And that might sound pretty outrageous, but even when we were in the worst slowdown we had, like after the World Trade Center or 2011, still about 15% of the sellers got more than their asking price, in a large part because their list price was below market. Buyers are willing to come in and overbid even in a down marketplace when the property is underpriced. Very price sensitive. If you price your home just a little bit too high, you're not going to get any lookers, you're not going to get any action, you're not going to sell. You price it a little bit low, you get everybody coming in and you get market value. The real debate, at least in my opinion, is if you go so low, like some people do, like list a home at $999,000 when it's worth $2.5 million, are you shooting yourself in the foot? And I would actually argue that that's low enough that you are. Some people that would pay that $2.5 million for that house aren't going to even see the listing opportunity at under $1 million. Professionally, like round numbers, I like to be close to where the market value is, but 1 or 2% below, I think, is a smart thing to do. It gets you a lot of activity. It allows the buyers to jump out there and see. The buzz tends to get a little bit of hype going. And if anybody decides they really want it, they feel the pressure from the other buyers and potentially pay above market value because of that perceived demand. Here's the overbid of single family homes only mapped out for you in the different areas. You might argue that I need to change my scale. I'll remind everybody I've already changed it once this year. It's just, these are unbelievably hot marketplaces, and putting in white or blue when you're this hot would be almost crazy. You can see in Atherton where 65% of the sellers got their asking price. It's definitely off. Here's no color from 30 to 50%, because at some point we're going to go down to buyer's market again. And at that point, you want your graph and your statistics to be the same. You don't want to be changing your benchmarks all the time. So I'm trying to stay put, and I resist making changes, but sometimes you have to make them. This is the magnitude of overbidding over time. You You can see we're basically at record high numbers. You can see even last year, this is a fairly sawtooth graph. It is only 1 week of data. I would have expected the magnitude of buyers overbidding would stay roughly the same, but clearly it vacillates a lot from week to week. But this isn't really changing of market conditions. It's just a matter of what listings, what buyers, what price they're going in over asking price on what happens to this. There is a difference right now. I would say, you're up here somewhere around 115.5%. There's clearly a difference between that and where we were at the beginning part of the year at around 111%, or where we were last year somewhere mostly around 108%. But is there a difference between any one of these weeks? No. So you have to be careful on how you read statistics. This is the three major components over time. You can see that San Mateo County actually has come down somewhat noticeable. Santa Clara County is slightly coasting down. Condos and townhouses, I would say, is pretty flat still, but they're pretty impressive when, the average seller is getting something like, in the case of Santa Clara County, something like 117% over their asking price, and in Santa Mateo County, something like 115.5, 116% of their asking price. That's a pretty hot and impressive marketplace. This is the magnitude of overbidding graphically. You can quickly see that Cupertino's at 122%. Milpitas is not far behind at 120. Campbell's not far behind at 120. It's a red hot marketplace. Saturated red is at 117.5. So a lot of these areas are saturated red. Some of them are getting close, like Saratoga Las Gatos isn't quite saturated red. Los Altos Palo Alto isn't saturated red, but it's really hard to see the difference between here and the Bay Cities, for example, or Cupertino. To me, I wish the color gradient would be more than it is, because even looking at my square boxes here, I look at a lot of these. Yeah, I can see that South County is lighter. I can see that East San Jose is lighter. I can see that Atherton's lighter. I can see the coast is lighter, but that's about it. But that I don't have any control over. But there is no color between 99 and 101.5%. It goes saturated red at 117.5%. This is the median price only for the three different micro components. It would get too crowded if I put on my 10 and 90% as well. Here's that same information graphically. Here, the white color Redwood City is your median price for the two county area. And then the pinker colors are slightly above. Your bluer colors are slightly below. The dark blue is the cheapest, and your dark red up here is your most expensive. Here is the appreciation for the different micro market areas. And this is comparing to the entire 2020 calendar year. This is the amount prices have gone up. You can see it's pretty across the board, pretty aggressive. The yellow highlight is where the peak is. So you can see there's still a fair number of areas that have hit their peak fairly recently. There's some that are back beginning of March, end of February. So that's noteworthy. That would be part of the cooling off that we're experiencing. This is a table. Now you got to be a little careful because we're not comparing apples and apples, because I'm labeling this April data. It's April data, which is gathered on 6th of May for every year except for this year, and we're not there yet, so you can't possibly do that. Instead of starting on April the 1st and going for 35 days, which would be through May 5th, which I've done for my historical data points, here I started last night at midnight on the 15th, and I went back in time for 35 days. You got to be a little careful on how you draw comparisons. For example, inventory. This is going to be artificially low because of Easter. It's also going to be low because inventory gradually increases through about the middle of July. 535. Will we catch 687? It's going to be tough. I don't think we're going to catch 800. I actually think we're going to fall short. So we're going to end up this year on May the 6th reporting that April 2022 had the least amount of inventory for sale. You come down to days of unsold inventory average and DUI, it's going to be fairly constant. I wouldn't expect any changes. So if 16 didn't catch 17, it could go either way. It's not going to catch any of these other numbers. 8's already even, and that's your median. Your average at 11.4 is essentially your lowest. I will point out it's lower here in 2020. The reason that's crossed out is the MLS, because of shelter in place, stopped counting days on market. So as the homes sat on the market for periods of time, their days on market didn't go up. So you got to the point where you were selling more than half the homes. They claimed they weren't even on the market yet because they had a big zero in there because they weren't incrementing them for being on the market. This data here is bogus as far as the average days on the marketplace. Going down to offers accepted, you pick up the number of transactions here at 1,159. That number will go up. It's already not the lowest record, which was in 2020, again, because of the pandemic. So if you cross out that, you're basically going to come in real close to tied for the lowest. I actually think it will probably beat 2018. I think it will beat 2019. It probably will not be 2021, but it's significant in that you're keeping the volume of transactions up with less inventory. So what that tells me, the primary reason that inventory was limited back here, volume of transactions was limited in the earlier years, being 2018, wasn't lack of supply like so many people were claiming, because now you have less supply and you have more sales. Now, it could be a contributing factor, and I wouldn't argue that it's not a contributing factor, but it's not the major factor. Overbidding, I just noticed I'm off on my decimal place. This is clearly going to be 117.4, not 117.47. That'd be people paying 100 times the seller what they're asking, and that's not happening. So the decimal place got goofed up there. 92%, both of these numbers are record high. I see no reason not to expect them to close out April being at record high numbers. And of course, your price is probably going to be record high numbers as well. And then the last slide for the day is the comparing apples and apples, but in order to do that, we go back in March. So this is historical data. It's the same information, different data set in the table. So with that, I'll go to the root URL tables and see if anyone's got any questions for me. And if no one's got a question, I'll end the meeting. Not hearing anyone or seeing anyone on mute, I'll end the meeting. Thanks for joining me. See you next week. Take care.